Henry, good to have you. So the late quarter increase in deal scrutiny, interesting here. It was more Europe and larger deals a quarter ago, but now it's expanded. Give some more color on exactly how quickly that happened and how pervasive you think that's going to be, for how long.
Yeah, thanks again for having me, John. I appreciate it. Look, like you said, we had a great quarter. We beat on the top line. We beat on the bottom line. Most tech companies don't have a bottom line to beat on. We're running this business profitably. We grew the top line 46%. We had 41% operating margins. You and Deirdre were talking about big tech companies having profitability and other tech companies, the smaller ones, having a path to it. We're already there. So we're driving great unit economics in our business. Now, what we saw in the quarter and what you've heard from software companies for the last 4 months is this idea of sales cycle elongation. And I think what they're not explaining, or what hasn't been explained, is what does that actually mean in the business when a sales cycle elongates? What it actually means is that your reps, your frontline account managers, your frontline account executive, they're spending more time for the same outcome. More calls, more emails, more video demonstrations, more executive review with a CFO or a global CFO. And so all of that makes your capacity be constrained. And so what we saw with our account management team on the customer side is that their capacity got constrained because of the sales cycle elongation. And what that caused was us not being able to upsell and cross-sell at the same rates as we have historically. And that's how the sales cycle elongation is going to manifest in companies,
right?
Is it's going to eat away at capacity.
Well, this also brings me to kind of revisiting the idea of net revenue retention, because I think I and probably investors in general have been sort of looking at this as a gauge of loyalty and how healthy a core product is. But it seems like as we pay more attention to this in software, probably for the first time during a real slowdown, when headcount isn't growing so fast at these customers, when you get those capacity issues that you talked about, and when data expansion isn't happening as much, they don't have as much just data flowing into the system, even if they're still liking and using the product, the net revenue retention number is going to go down, isn't it?
Yeah, so there's two ways to think about net revenue retention. Or net revenue retention is made up of two things. One, sort of gross revenue retention or churn. In our business, we see our gross revenue retention staying stable compared to last year. Now, what the other part of net revenue retention is upsell and cross-sell within your existing account base. Mm-hmm. And so your ability to keep your customers, that's one thing, and that's a great sign of loyalty, and we've seen really good numbers there. Your ability to upsell and cross-sell, if sales cycles get elongated, all of a sudden your capacity restrained there, and that's what's going to hurt your net revenue retention.
But one more piece of that, if customers had been using more seats over time, just in the same product, they were spending more, getting the same thing. But if they don't need as many seats, either because they're not hiring or because they're actually cutting, doesn't that affect net revenue retention?
Yeah, absolutely. Net revenue retention, a part of net revenue retention can be expansion of seats. It can be expansion of functionality. It can be expansion of data credits for us, for example. For us, we're not penetrated across nearly any of our customers wall to wall. And so we don't rely on the next user, the next hire to add a new user seat. In most of our companies, we might be penetrated across 10, 15, 20% of the user base that we can attract. And so our job then is to go find the additional users who are already there to get our software in front of, to drive efficiencies in their go-to-market motions. And so if you are wall-to-wall already, yes, then if you're not hiring or you're cutting, that becomes a headwind. We see tremendous opportunity within our accounts to continue to expand. We're not reliant on that next hire for that expansion.